The IT industry has shown flat returns since the last 4 years. You can see Nifty IT at the same point where it was in Jan 2022. So flat returns since last 4 years, despite stellar returns in the previous 2 years, especially after the COVID. So in this video, we'll discuss how IT has underperformed in the last 4 years and what were the reasons for it. We'll also discuss how time and price correction has happened in the IT stocks, especially bigger ones, in the last 4 years with almost minimal returns. We'll also discuss what is in there for 2026 in the Indian IT space and how Indian IT industry is being reshaped by the widespread adoption of AI. So let's get started. IT's underperformance has been justifiably driven by the lackluster growth as well as threats of disruption from AI and geopolitical headwinds. The valuations which were peaking in 2022 are seemingly looking justified at this point of time. Indian IT is trading at a PE of 26.1 as compared to a 5-year average PE of 29.7. So Indian IT is at a cheaper valuation since the last 5 years. So however, with valuations now at a relative discount to other sectors and Fed rate cuts potentially triggering a recovery in discretionary spend in the enterprise IT, 2026 especially should see a better performance for IT than in 2025. Artificial intelligence is fundamentally changing the IT industry. It is fueling the Indian IT companies to compress their margins and also changing the skill demand for them. Traditionally, Indian IT industry has been a man-hours model, whereas AI is completely disrupting it. It is automating everything from coding to documentation to support. Therefore, Indian IT industry has to evolve. The American and European clients are willing to pay on an outcome basis and not headcount basis, which was the earlier model. And this has hit large service firms the hardest and forced them to evolve and change. However, things are improving in the recent quarters for the IT industry. Even as AI-driven productivity gains have reduced some legacy services work, a new cycle of AI-centric workloads and AI-native deals will become a tangible revenue tailwind starting fiscal year 26. India's top-tier software service firms together reported a 26% gain in total contract value year-on-year in the second quarter ended September 2025. A Nuvama research highlighted that the deal momentum has nonetheless remained consistent over the last few quarters despite ongoing tariff and geopolitical uncertainties, indicated by the growth in contract values on an LTM basis. So therefore, analysts are anticipating that the momentum will strengthen over the next 2 years as clients increase their spending on AI projects. Additionally, project delays appear to have bottomed out in the June quarter, with management commentary from the Indian IT firms and vendors now pointing to a better traction in the signings. We can see on a quarter-to-quarter basis also, the sector deal wins recovered by 2.8% after a 15% drop in the prior period, led mainly by HCL Technologies. If we talk about Indian IT hiring, India's IT talent market is finally cooling after 2 years of exponential salary growth with premiums from generalist AI and digital service roles, including automation and analytics, falling 20-40%. However, specialized Gen AI, ML Ops and AI governance roles continue to get exceptional pay given the acute shortage of such talent and the high demand. However, from an investment point of view, you should avoid companies with low margin and people-heavy IT. Avoid firms with no AI IP and staff-focused companies. Prefer companies which are in mid-cap space in the IT with AI plus domain focus, which are more engineered R&D firms as well as which have focus on products as well as service hybrids. So, after all this information, you can see a clear transformation of the IT industry from labor arbitrage to intelligence arbitrage. So, from an investment point of view, I will also discuss now how you can invest in the IT space in the Indian stock market. Now we will discuss the ways to invest in the Indian IT sector. So if you are intelligent enough to select specific stocks, you can directly select the stocks and invest in them. There are a large number of stocks, especially in the large cap space, such as Tech Mahindra, Infosys, TCS, Tata Consultancy Service, Wipro. These are large cap stocks. If you are willing to invest in the rapid growth mid cap sector, there are particular stocks such as Coforge, Persistent, LTTS, KPIT. There are many firms where you can invest directly into the stocks. So if you want to diversify your investment in the IT space, you can also invest through an ETF, ITBs, which is a very popular ETF. It is a Nippon India ETF, which invests in the IT space. You can also invest through mutual funds, On the screen, you can see these are top 5 mutual funds, which are tech-based mutual funds, which are distributed through different AMCs where you can invest in them. The year 2026 and 2027 look good for the Indian IT space, especially after the kind of contracts and deals happening in this space. AI is booming, and Indian IT space is intelligent and smart enough to absorb this, you can say, a transformation, and we can see a lot amount of contracts happening. So Indian IT space is going nowhere, specifically after the fears that Indian IT will, people were saying that after the adoption of AI, the Indian IT space will see a major downside. But we can see that the deals are happening, the contracts are being signed, and Indian IT space is here to stay. So friends, thank you for watching this video, and please follow us for more such videos. Thank you.